What if we told you that something the world has been anticipating for decades is finally unfolding before our eyes? Right now, traders around the globe are witnessing an unexpected development that few could have predicted. The Iraqi dinar has reappeared on major Forex trading platforms. For years, millions of dinar holders have waited anxiously for a turning point that could redefine their financial outlook. Today, that moment appears closer than ever, as live price movements are being detected on systems tracking real-time currency values. But before enthusiasm turns into speculation, it's important to separate fact from fiction. Is this truly the long-awaited revaluation, the so-called RV, that could dramatically alter the dinar's value? Or merely a technical adjustment with limited short-term impact? In this report, we'll examine exactly what's happening, explore its implications, and provide a realistic perspective on what the Iraqi dinar's return to Forex visibility means for investors and everyday citizens alike. For several years, the Iraqi dinar has been largely absent from major Forex platforms. It's available primarily through niche dealers and exchange networks. Investors have long awaited a breakthrough moment when the currency might regain recognition in mainstream global markets. Now, that moment appears to be arriving. Reports are emerging from traders in multiple regions, confirming that the Iraqi dinar is once again appearing alongside currencies such as the US dollar, the euro, and the British pound. For a currency long regarded as a liquid and difficult to trade internationally, this is a notable milestone. Live quotes are now fluctuating in real time, suggesting that international banks and trading systems are beginning to acknowledge the dinar in a more formal capacity. However, while this development has sparked excitement, it's crucial to understand what it truly represents and what it does not, for the dinar's near-term value. To understand why this is significant, we must first consider how currencies are listed in global Forex markets. These platforms do not display every national currency indiscriminately. There are clear requirements before inclusion is granted. First, there must be sufficient trading volume to justify active listings. Second, the currency must demonstrate relative stability and oversight by a credible central bank. Third, major financial institutions must be willing to facilitate transactions. For the Iraqi dinar, meeting these criteria has been difficult due to past political uncertainty, economic disruption, and the lingering effects of conflict. Yet recent developments suggest that some of these barriers are being overcome, paving the way for greater recognition. This shift is more than symbolic. It signals progress toward legitimacy in international markets and new opportunities for transparency in trading activity. Despite the optimism surrounding this change, investors should remain cautious. Currency valuations are influenced by a complex range of factors, including political stability, fiscal management, commodity exports, and international relations. Iraq's vast oil reserves are often viewed as a key strength supporting the dinar. Since oil sales generate foreign revenue that can stabilize the exchange rate, however, oil markets remain volatile, meaning revenues fluctuate. Additionally, Iraq continues to rebuild its economy following years of hardship, and these conditions still weigh on the dinar's performance. While inclusion on Forex platforms may increase visibility and liquidity, it does not automatically translate into higher value. As such, investors should approach this moment with informed expectations rather than speculative assumptions. The concept of currency revaluation has long been associated with dreams of sudden dramatic gains. Many dinar investors view the Forex reappearance as a possible prelude to a long-promised RV, an overnight surge in value. Yet in modern financial systems, major reevaluations tend to occur gradually, reflecting underlying improvements in economic fundamentals rather than abrupt market movements. Governments typically adjust exchange rates incrementally in response to inflation trends, demand shifts, and macroeconomic stability. Overnight reevaluations are exceedingly rare and typically occur only under extraordinary political or monetary circumstances. Therefore, while the dinar's reemergence on Forex screens is noteworthy, it should be interpreted as the start of a gradual normalization process, not an immediate windfall. Over recent years, the Central Bank of Iraq has made deliberate efforts to modernize the nation's financial infrastructure. Initiatives include upgrading banking systems, enhancing payment mechanisms, and expanding cooperation with international financial institutions. These steps are vital for improving transparency and reliability, key factors for any currency aspiring to global recognition. Such reforms not only strengthen confidence among investors, but also demonstrate Iraq's commitment to maintaining a stable, credible currency environment. This foundation, combined with regulatory improvements, increases the likelihood of sustainable trading activity over time. For dinar holders, these measures could eventually make conversions and transactions smoother and more secure, though progress will continue at a measured pace. Visibility on international trading screens also brings heightened awareness. When a currency becomes accessible to global traders, it naturally draws interest from new participants who may have previously overlooked it. This can lead to higher trading volumes and, in turn, improved liquidity. Greater liquidity tends to stabilize a currency's value by narrowing price fluctuations and creating a more reliable market environment. In the case of the Iraqi dinar, such developments could encourage additional business engagement and foreign investment, gradually strengthening the economy. Still, these are long-term effects that depend on consistent policy execution and sustained confidence, not short-lived momentum. It's equally important to acknowledge the inherent risks. Currency investment, particularly in emerging markets, carries exposure to political and economic instability. Sudden policy changes, shifts in global oil demand, or regional tensions could negatively impact the dinar's value. Investors should remember that Forex markets are highly dynamic, and no listing guarantees future appreciation. Financial advisors consistently recommend diversification and prudent allocation, ensuring that speculative positions remain within manageable limits. For long-term dinar holders, this moment may feel like validation after years of uncertainty. But sound investment principles remain unchanged. Manage risk, stay informed, and avoid emotional decision-making. For investors tracking this story, the dinar's new visibility can be seen as a milestone, a signal that the currency is gaining a measure of international legitimacy. Yet recognition alone doesn't equate to immediate profit. The forces that determine currency strength, GDP growth, trade balance, political governance, and inflation, remain decisive. Iraq's progress in these areas will shape the dinar's trajectory far more than symbolic listings. While Forex visibility enhances accessibility and transparency, true valuation growth will depend on the continued strengthening of Iraq's economic foundation. When a currency gains placement on global trading systems, it typically means that banks and brokers are now quoting real prices and facilitating transactions. This, however, should not be mistaken for a confirmed revaluation or sudden wealth opportunity. Listings provide structure and visibility. They help attract interest and establish credibility. For the Iraqi dinar, appearing beside the US dollar, euro, and pound represents a meaningful step forward in legitimacy. But it doesn't override the country's structural challenges. Investors must distinguish between visibility and value. One signals opportunity, the other requires time and economic strength to materialize. It's easy to see why this development has reignited speculation across online forums. Many outlets promote sensational claims of imminent overnight gains, often unsupported by credible data. In reality, currency markets move based on sustained macroeconomic performance, not sudden optimism. Reevaluations are typically guided by central bank strategies that account for inflation, trade conditions, and fiscal health. Dramatic overnight RVs are virtually unheard of in modern monetary systems. For that reason, responsible analysis must prioritize factual reporting, emphasizing fundamentals over rumor. Enthusiasm should be tempered by realism and grounded understanding of economic indicators. Perhaps the most encouraging sign here is what it reveals about Iraq's gradual recovery. Over the last several years, government-led financial reforms, improved central bank coordination, growing engagement with international systems have all contributed to this point. Modernizing the payment infrastructure and enforcing regulatory transparency are steps that help solidify trust. Global markets value stability, and Iraq's ongoing reforms suggest that trust may slowly be returning. As legitimacy builds, so does the potential for sustained participation from foreign investors, which in turn supports the currency's broader market presence. Even so, patience remains essential. A listing on Forex screens does not imply a sudden spike in purchasing power. Currencies strengthen alongside long-term improvements in productivity, fiscal management, and international partnerships.